Hello, traders everywhere. Jeremy Lutz coming to you from the digital studios of Market Club, and a loss of jobs is weighing heavy on the market. As we head into afternoon trading to end the week, the stock market is trading at or near the lows of the day after U.S. payrolls fell by 701,000 in March, making that the worst jobs report since 2009, and the unemployment rate jumped to 4.4%. That's after on Thursday, the Labor Department said that jobless claims jumped by a record of 6.6 million for the week of March in 2017. However, we are at the end of the week, so we'll take a look at weekly charts. A couple things to keep an eye on this week in mind will be that volume is about 30% lighter than it was in the previous weeks, and the S&P 500 intraday volatility swings up and down, or roughly down to about 2 to 4% versus where they've been 5 to 7% moves in the previous weeks. So we're kind of heading more into a sidelines mode, as you can kind of tell by the chart. This is a weekly chart of the S&P 500, and this is the last 3 weeks. So you can kind of see we're getting more range bound and kind of tightening up those moves during the week, and I'm sure you noticed that this week wasn't nearly as volatile as previous weeks had been. However, right now we are trading at 2,471.22 with a chart analysis score negative 100, with red trade triangles across the board on the S&P 500. Key level to watch is coming back to us a little bit, 2,641.39. A move above that level would give us a green weekly trade triangle indicating a move back to a sidelines position for the S&P 500, currently posting a weekly loss of about 2.7% on the week. Moving along, the dollar index bouncing back after losing 3.6% last week, currently gaining 2.44% this week, trading back above the 100 level, with a chart analysis score plus 100 indicating that we are in a long position for the dollar index. Key level to watch should be 97.64. A move below that level would issue a red weekly trade triangle indicating a move to a sidelines position for the US dollar. Dow Jones currently trading at just below the 21,000 level at 20,940, down 3.2% on the week, with a chart analysis score negative 100, indicating that overall we're in a long-term downtrend for the Dow. Key level to watch for us is significantly lower this week at 22,595.06. A move above that level would issue a green weekly trade triangle indicating a move back to a sidelines position for the Dow. And that number really fell down because we've tightened up that range in the bottom here. Moving along to the NASDAQ. Currently trading at 7,319.32 with a chart analysis score negative 100, indicating that we are still in a long-term downtrend for the NASDAQ, currently losing 2.4% on the week. Key level to watch should be 7,880.31. A move above that level would issue a green weekly trade triangle, indicating that we would move back to a sidelines position for the NASDAQ. Gold, after gaining almost 10% last week, has fallen back a little bit, down about a half a tenth, or about 0.5% this week, trading at 1,644.10. Chart analysis scores negative 55. Even though we have a red monthly and a red weekly trade triangle, that trend is kind of in a sidelines mode. We're kind of trapped around this $1,600 range. Key level to watch would be 1,597.10. A move below that level would issue a red daily trade triangle, indicating a move back to a short-term short position for gold. Crude oil making a big move today, currently up 26% on the day, trading at 27.74, moving the chart analysis score to negative 55. So overall, we still have a long-term downtrend with a red monthly and a red weekly trade triangle. Really, it's a short-term bounce this week on news that this Saudi Arabia and Russia may, and that's a key word here, we haven't had confirmation yet, may cut production to alleviate some of the oil glut globally. However, that remains to be seen, or any final numbers are really seen on that. Key level to watch would be $20.04, so 20.04. Move below that level would issue a red daily trade triangle, indicating a move back to a short position on the short-term time frame for crude oil. We'll wrap it up with Bitcoin. Down about 1.3% on the day. Disappointed last week. It was heading for quite a bit of a gain, but kind of flustered and lost its luster through the weekend. Ended up losing 1% on the week last week. Bouncing back this week as of Friday, right now up 7.6%. With a chart analysis score negative 65, indicating that we are still in a long-term downtrend, but it's ever growing and more into a sidelines trend, trading at 6,698.97. Key level to watch will be 7,236.39. Get above that level, we will get a green weekly trade triangle indicating a move back to a sidelines position. With that, every success. Have a great weekend. Hope you and your families are staying safe, and we'll be back next week to wrap up the markets.